All right, welcome back to Market Master, Roland Attenborough. Let's just go ahead. Let's just take a look at the chart really quick here while we've been discussing this low point from this February that we would have this bear market rally, and of course we did do this. We talked about around May 5th when I did a video that we would be topping out and sell in May and go away, and of course this has taken place, and we're now back and retesting this area which we talked about. We stated that once we drop below this trend line here that we would be immediately back to retesting this low at 59 and 60, and lo and behold, here we are. I do believe that we can see a small and sustained recovery, probably a move up underneath into this low, possibly into this 60 level. If we don't get above these tops in these last few days here in these candlesticks, then we'll immediately be showing tremendous weakness and a move down. And we've been discussing that our levels for the 38% level in the last two campaigns, or the last two major campaigns down here since October, have been around 36 and 38%, and that would resemble an area around this blue line. It doesn't necessarily have to be, but I've also been calling, as you know from our previous tutorials, a move down into the 40s, which would likely take place here within this year, and not just within this year, sorry, within this cycle, as we are running out this 12, 13, and 14 month bear market campaign from the top, which was, we had stated that we would be making a top in that September, October, and November period, because those are the 17, 18, and 19 months from the halving event. I've went ahead, and in the future I've postulated to you in some tutorials that when the top will come in 2029, and I expected that we would be running about the very same time cycles, and that we would be running again another 1,060 days from the low, and 17, 18, and 19 months from the halving event, which would bring us into an area around September and August, September of 2029, followed by again another likely 12, 13, and 14 month bear market. So here we are, we're back retesting this area, and we're watching closely that if we spring up, we have this angle moving down here, and it crosses our bear market rally channel, and if we don't get up into the underbelly of this area here, this is a very tough spot to get above, and if we manage to get above this area here, then we could have an easy resumption back up into this channel. But it's looking very much like this market is getting very weak. Getting below this area and doing a headbutt underneath this would very much show a lot of market weakness, and we could easily see a move down to the 51 and the 40, and that would happen quite quickly, in my opinion, of the work and the cycles that we talk about here and the way that markets move. We would very much see a fast move down once sitting and breaking down below this flat line here from our last low. Once we got below this, we did a headbutt up into here, and then it was straight down. So if we don't stay above this area here for several weeks, and typically these rallies can last, well, typically longer than human emotions. However, a month is typically, the ending of these cycles. We've had 2 consecutive and 3 consecutive months of sideways and upward, slowly grinding markets here, trying to get traders to believe that we're in a bull market when in fact we're not. So I want to show you this because here we are, we're on a very critical phase here, and we're just waiting to see the follow through. If we get this small pump and then a rejection, or we continue to make this move down underneath and contact these levels that we've pointed out. Let's next go take a look at the SPY, the S&P 500. Here we've discussed that we've been in a 17-year upward trend, and I stated that in some tutorials about the S&P 500 that we would come up and we would touch upon this, and we would likely see a reaction and a change in trend. And of course this is again precisely what has happened, and we've seen a pretty good drawdown here. And if we get below this low here at this 73, then it's most likely we will be heading quite a ways down, and most likely would be retesting first of all this low at 63 here. This would be our first point where we would really see a major reaction, as well as the topping part of this channel here. This is another area, this 69. Failing to stay above this would bring us immediately down, and we would retest this area. Let's go take a look at this on the weekly chart, and then maybe we'll go back and have a look at the Bitcoin, and we'll have a look at our indicators on that chart. So looking at the S&P 500 here, this has been in a, like I stated, this is in a 17-year bull market, and inside of this we've had some major whipsaws and returns back to what I would call the median line, which would be this yellow area right here. As you can see, I'll just kind of bring this up a little so we can see it better, that from 2009, after that housing crisis and whatnot, we've been moving up steadily. We've only touched this white line once since, and it's about time. It's getting very ripe for a retest of this area here. I'm not saying we have to. I'm just stating that it's very likely that the market comes back and retests first of all this median yellow line in our channel, as we've done many times since 2009. We've retested this area, and on one occasion here back in obviously 2020, when we've had a major correction here, we've touched upon this line. So again, here we come back to the top part of this channel top, and then S&P 500 finds it much more comfortable to come back and swing back. Here again we had another major swing back to this angle. So I just wanted to point this out, that guys, just be careful here with your portfolios. We're about to see it looks the likelihood for a reset of this market to this yellow line is looking very good, and very ripe for a reset of the market. And of course that would again propel us up into another test of the upper band. Again, failing to get support here on our current yellow band would bring us directly down into this area, and we could certainly see this this happening near the end of the year here. We could see this into the beginning of the new year as well. This by the time we get this Clarity Act and a bunch of things carry on. We have our midterm elections here. We have a lot of things going on. We have a very unpleasant conflict going on geopolitically in the world here with a couple of different countries, and we have a lot of instability. And with that, the stock market could, it could unravel rather quickly and reset back. If we were to lose this area here, where could we see a move down? Well, we would first see it back down to this 3,000 level here, if that were the case. And we're coming up on a 250-year cycle for America here, and we could see a very likely unwinding of the United States just due to the amount of debt. This we're trillions of dollars in debt, and who are we in debt to? So who does America owe this debt to? Who's collecting this debt, and who's taking stock of this debt? Who do we owe? And for that matter, every nation is in debt somewhere. Who do we owe this debt to? So that's a question. That's a very touchy subject. I think a lot of you know who the debt is owed to. It's always the same. It's always the same organization, that we're not allowed to speak out against and talk about and criticize. I'm just being in general. I'm not trying to be politically motivating in any way. I'm about a financial directives more than I am about geopolitical. But we just, when we have, these things happen, who do we owe this 30 plus trillion dollars to? And where is this world debt going that all these nations are in debt to? It's just boggling to, and if you have a private Federal Reserve that can just print money for war, then why can't we just print the money and pay up all these debts and give this funny money, this fiat paper currency? Why can't we just write it off? It just seems mind-boggling to me. And by the way, if you're wondering how come we've seen such a major move up to here, it's not the little people that are buying stocks. All right, this is a corporate buyback strategy where they are buying back all the stocks that you could not hold on to. They flushed you right out and bought back these stocks, and now they're paying themselves the dividends. You're not getting them. So I just, I learned all this stuff when I was in 2003. I took a bunch of night courses and studied to be a stockbroker, and I was, looking to get inside the stock of or the Wall Street and be a stockbroker, sell your stocks and provide hopefully valuable investments. However, I was faced with signing a non-disclosure and non-competition agreement before writing my exam to be a stockbroker, and I just ethically could not do that because I would be forced to call you up and try and sell you some stocks and tell you, oh yeah, you should buy this stock, it's going to go up majorly. And then of course, the firm that I would be employed underneath would short your stock, and we would run a campaign down against you and then buy back the stocks. And I mean, that's the word broker, right? It makes you broker, and it's a brokerage. It's there to break you. And I'm sorry that comes across kind of negatively, but this is my observations and being in the market, I understand what's going on, these manipulations. I just thought I'd bring that to your attention. I'm sure that you've probably wondered why the market has gone up when we have unfavorable economic data. We're in the biggest debts of the history of the American country, and how stocks can rally when your country's got the biggest debt around, 30 plus $1 trillion in debt. It just, yeah, it's all, in my opinion, and that's all this is. This is just for educational purposes. It seems that stocks are being manipulated when they go through this big washout here in this, event that happened that crippled many, many families, not just American families, but worldwide. The market washed you out, and from there, people just were trying to survive as best as they could because they weren't allowed to leave their house. They had to cover their face. We had all this terrible stuff going on, and you were told that it was safe to have, these venomous, poisonous injections, and of course they've come around and they've proved that it's true. The people know that this was some sort of fabricated thing, and we're not putting up with it anymore as people. And here we are. Look at the market, right? After you got washed out here, right? The corporate buyback of stocks just was on a war path, right? And they bought back all their stocks now. They've pretty much bought all their stocks back, and looks like they're about to unload them all. And of course, when we go and have a look at the daily chart here, it shows us that the this corporate buyback has taken place, and we're experiencing the onset of a major short campaign, the unraveling of this buyback. This has just been an epidemic of money wealth generation for the corporations buying back their stocks to balance their books. I mean, America's in a bad shape with this 30,000 or 30,000, 30 plus trillion debt, that we owe to someone, some organization, or some country, or some individual. We're not sure exactly 100% who this is or what organization this could be, but it's, it's usually the people that are telling you that, you got to work harder and you got to do better and you got to pay your taxes. It's typically these organizations and people that are in control of this fiat market, this fiat currency. And I think that's why Bitcoin is very strong. It's come out of the gate. It's probably one of the most successful ventures that have started. I mean, how many times in the stock market have we seen these investments go sideways? Look at Bre-X. We had that gold company, Bre-X, that stated they were finding the most amount of gold ever in the world, and then Guzman got pushed out of the helicopter and somehow he perished. And of course, nobody can figure out how come this company falsified all these things, and then Bre-X went down to zero and nothing. You lost everything. And by the way, I invested in Bre-X at that time. I did as well. I got wiped out of my my stock portfolio there, and that was another thing that led me to my discoveries with these market cycles and the this false fabrication of news events and window dressing stocks Then we had Enron. Everyone remembers Enron, right? Everyone remembers that one, right? That was another fatality for the stock market and for stocks, you know. So I'm just stating right now, it looks like we're in the middle of some sort of preemptive correction back down to these areas here, most likely around this topping area of this market here, and possibly as low as this area here at 63, and then a washout down back to where stocks like to come back to, which would be around this 6,000 level. So I just wanted to point that out to you. Let's just go back and let's take a look at let's go take a look at the market here and see what is going on. Oh, just never mind. You know what? I know you saw that spike down. I mean, these electronic charts, they sometimes like to lead you astray. But let's go take a look at the indicators. So we were speaking about, you know, the last few campaigns. You know, I've put these trend lines down. We don't seem to have a bounce back until we get down to these lofty low levels and then bounce back across. We're starting to see the onset of a first yellow or white line here, so we're getting close to a major low here, and then possibly a retest and a bounce. So I just want you to pay attention to that. And you know, we've seen this. You know, here we are again. We got close to the low here back in November, and then by the 21st here we had the major low. So it's possible and likely we continue to move down and make these moves. So I'm just asking you to be really, really careful here. The market's got a lot of, you know, it's got a lot of tricks up its sleeve. So just watch that. So momentum, let's go, or sorry, RSI. Let's go take a look at the RSI here. I don't know why this isn't populating. Let's go have a look. So again, the last few campaigns, I've put these trend lines down, and we don't typically have a major move until we break above this trend line. So here we are. We're back into the basement with the RSI, and it's looking like it's trying to get above this low level here where we've hit many times, and we're going to watch this. If we get above this trend line, then we're going to be in a summer rally. But let's just see if that comes to fruition. Let's go over here. Let's take a look at the momentum. So on the momentum indicator here, I've put these trend lines down going back, of course, till last year when we were seeing the topping patterns in Bitcoin, and we didn't get these snapback rallies until we broke above these trend lines here. And of course this has happened several times over. Here again, we're again moving down and we're looking to retest. I just put another trend line on our lower top here that we made in May with this indicator. Of course, we're right up against it again, and if we break above this, we're going to be into some type of a summer rally. However, if this momentum indicator gets weak again, then it's Humpty Dumpty and back down. So that's the momentum. Let's go take a look at stochastics, the leading and lagging indicator. So again, I've populated these trend lines. They're all the same angle, and we've just, once we get above these angles and hold above them, then it shows that the market's getting in a heated position and looking to move up. Again, we could just take this here and let's just copy or clone it, and let's just put it on our next top here, and let's just see what it's saying to us. Well, we did break above this trend line, but again, we've sunk back down and we're sitting in this low position. So looking at this here we are, we've just broke over it, but again, back into the basement. So if we can get up and above this area here where all this energy is, then we'll be in a summer rally. Otherwise, it'll be a retest and back down into the end of the year where we think the market cycle is going to culminate. And with that, we are stating that the work has been very on target for the 4-year cycles that we go through with Bitcoin. Just because I have this circle here doesn't necessarily mean I think prices will go here. This is a timing target, and I just wanted to point that out to you that it's likely impossible that by this November period the market structure for Bitcoin's bear market rally will have culminated and distribution will have run out and accumulation will start to begin. So that's what I got for you guys today. I wanted you to just see the indicators. I wanted to talk to you about the stock market and Bitcoin. So that's what we have for you. Peace and love, brothers and sisters.